Poll report is 9 o'clock. It is July 12th. Let me double check my audio really quickly. Should be good there. Perfect. All right. Welcome back to the poll report. Let's kick things off with a little bit of a weather report. Take a look at some pre-market levels, possibly a 554 test today. We're up a little bit pre-market to 557. Interesting price action as of yesterday. For anyone that was watching, we had CPI news hit. We had PPI this morning, not much of a reaction, but we faded hard off the highs from 563, almost 564. This was pre-market after the CPI data dropped to 8:30 a.m. and we dropped all the way down to 556. So the S&P sold off from top to bottom. It was over a 1% move. Here's the candle. Check the numbers here. S&P was down from high to low around 1.1%. The Qs, even worse, high to low over 2%. We had about a 2.49% drop just on the day for the NASDAQ. Take a look at the NDX, same thing. Take a look at the SPX, same thing. So, we've been looking, we've been waiting. We talked about all sorts of reasons why we think we're going to see a bit of a drop. My biggest reason was really this just 12-week count on the weekly time frame plus overextended conditions, which meant overbought with divergence. It's going to be interesting. Now, does yesterday's sell-off mean that there's more to come? Remains to be seen. This candle right now looks pretty indecisive. After having 2 weeks of indecision, having one kind of, last week was a bit of a, I'm not going to say a blow off top, but last week was a thin holiday disrupted week. And so this week having it feel like it, what did we do on Monday, Tuesday, Wednesday? We formed new highs, all-time highs with very little motion, right? Like very little trends, very little volatility for the day. Let me go into a couple extra layouts here. I do have something interesting I wanted to show. I saw this from a gentleman, Tom King, yesterday, which I thought was interesting. So let me look for some intraday action here, and then I'm going to bring up this put call ratio setting. So here is intraday. We're opening pre-market up around 90 cents from the looks of it. Let's go to the news for this morning. PPI data came in stronger wholesale level inflation than forecast. Prices are flat at core. Futures market this morning. Once this updates, tech risk a Brexit run. Oh boy. I haven't heard that since 2017, 2018, 2019, and 2020. That was a nice 4-year stretch on confusing the pound crosses and increasing margins. So Dow futures flat to stable. S&P futures flat to stable. NASDAQ futures flat. Gold down from yesterday. We had a pretty nice run on gold yesterday with the market selling off. Silver down a decent amount as well. And then oil creeping up there, 83 and change. Let's go to intraday. So even though we had a green week thus far, most likely there's no way we're taking out the lows at 52 or 542.50 on the SPY. I do want to look at some pre-market levels here. 554 is one that I'm watching. I'd like to see this get larger. Like yesterday, I took a trade, the 557 put. We talked about that live in session. It was, opening bell was, I'm trying to think, right around this area. So here's 9:30. 9:30 opening bell, just off the pre-market highs. I had a 557 long put yesterday that worked out really nicely. I paid about 75 cents for it, closed it out for about $1.80. And that would have been, I think it would have maxed out maybe around $1.90 to $2, having some time left into it. I did a Friday expiration. So not a bad trade overall. And then this morning, just looking to see if these sizes, light up with, gamma squeeze levels that, I'm looking for open nets at 1,500 or higher. It's Friday, so who knows? Could also be pretty sideways. I did take a small loss yesterday on my 0 DTE strangle, but it was a very manageable loss. I grabbed about $3 of credit, closed it out for about $4.15. but I think like 30 minutes later after I closed it, it was like 345, 350, and that was right in here. So there was enough time in the trade that I was, once this started to happen, I closed out the 0 DTE because it, I don't know, maybe I'm lucky because it just felt more directional yesterday. And that's not really a trading strategy, but it was just, call it a hunch. So that's why I got out for the small loss and then got in with the 557 put. And it was all here in my software. So, I mean, I why to 557? Because there was a massive level right here that just said that's a big level. The contract sizes were going up to 1,500, 1,600, 1,700, and prices started to fall. It just got bigger and bigger, and we ended up striking that level plus a little bit of gravy to the bottom. So overall, happy with that. Seeing if I could line up something today. If not, I'll wait. Usually this gives me a very solid, high probability trade, once or twice a week with a couple of good directional days. So I'm sure everyone that was in the markets yesterday, interested to see others follow through today or lack of follow through. If you go to currency strength, yesterday was a very dramatic day in the markets because of what happened with the yen crosses. Turns out there was intervention. I don't think anybody's surprised by it. We've been, wondering and asking, when is it going to happen for the BOJ again? Here it is, right? Right on the, right to the minute of CPI reaction out of the US, boom, Japanese yen intervention. So that's crazy stuff. I mean, we've seen it before. The last time we had intervention was back in April, I believe. Is that right? If I go to dollar yen, what was that big intervention move? I want to say that was back in April. Sure enough, April, right after an FOMC report. Like going into the kind of the dead zone of the Forex market after closing bell from like 4 p.m. Eastern time to 5 and change, 2, 3, 700 pip moves on the yen. It's like, what is happening? So anyway, does this do any damage to the yen crosses? As you can see on a lot of these charts we'll go through today, not really. It's obviously noisy. This probably got a lot of traders excited, but I'm still not trusting the follow through as of yet. I think it could have been a short-term play. And we'll see if this carry trade is like perfect, buy a dip, and then see it go right back up to these highs again. I'm sure some traders are thinking that 160 is this key level on the dollar yen. I don't think it's a key level on the dollar yen. I mean, it would be interesting, like we saw at 150. There was intervention at 150, and then we went up to 152, and then we dropped. So we had 160, went up to 162, and then we dropped. So are we going to see some follow through? Maybe. But where's the follow through? We make fresh lows. We work our way from inner trend line to outer trend line. We take out the intervention lows from April. That is an area that I'd be looking to trade. I'd trade small. I would trade with fairly tight stop losses. If you're getting a trade to go your way with momentum, move that thing to break even better, and fingers crossed that price stays far enough away and moves fast enough that you're in profit. That's my take. So we'll go through the yen crosses this morning. I also thought this is interesting. So on this ticker is PC, or you can just type in put call ratio. I thought this was really interesting on the S&P compared to the put call ratio kind of historically. So there's a lot of this happening when we had the markets. So basically it's this. I've got the put call ratio in green and red. And then when we start to see this moving average trending lower, the stock market tends to go up. So what's interesting is when this trends higher, okay, when this starts trending higher, higher lows, higher lows, higher lows, connect the dots to higher lows, that actually started to signal a correction, right? We start to peak out here, and we start to trend lower, we start to trend higher. So as we move into current price, what I'm noticing is, we're not at levels yet. Like this has been trending lower, and we have still been ripping to the upside. So for the most part, we have equal levels here, but trending lower. Now, I'm interested, of course, if we come into some of these levels and this starts to trend higher. If we're putting in a low and we start moving up, okay, and we start moving up again, if that type of trend line on this put call ratio is going to start signaling some type of top and a corrective move in the S&P. So it's, not leading or anything like that. It's still going to be lagging with moving averages, but this is an interesting instrument to kind of keep an eye on to see if and when we're starting to look at some follow through with some of these, sell offs like we saw yesterday. Okay. Or of course, keep it really simple and just follow price. So let's go to top down. Let's go SPY, Qs, DIA, IWM. Let's go to our, dollar index, oil, gold, silver, crypto. We'll do our currencies. And, please keep those questions rolling in here. So Gary, good morning. Denise, good morning. Chris, good morning. Sean, Catherine, what's happening? Yeah, April 24th in that previous intervention. Let's see here. Donna, thank you very much. Nice to see you this morning. FK, good morning. Good morning, everybody. All right, perfecto. So big indecision candle with the sell-off on the weekly chart. Pre-market, we're opening up a little bit higher by about $1. The market might have some fight left in it. It's still a green candle on the week for now. If we somehow get back down below 555, this is going to turn red for the week. Do I think we're coming back to 562? Probably not. I do have a broken wing butterfly on the SPX at 57.50. That trade is already up like 50%. I'm going to let that just marinate. I didn't do a super long trade. I was only out like a couple of weeks. This is to the 26th instead of the 30th, which is the 30th or the 31st. I think July 31st is the end of the month. Wednesday the 31st. So I did expirations out to the 26th. So next week is going to be a monthly expiration. We're also going to kick off earnings season today with the banks. And I am curious to see, I think it was JP Morgan, Wells Fargo, Bank of America, perhaps, Citigroup. So let me see what their earnings showed before market today. I'm just curious. Earnings, top bottom beat. Okay, JPM. Top bottom beat. All right. What else? Is it Wells Fargo? Yes. Top bottom beat. So we've got earnings or EPS and revenue from three major banks. Well, this is interesting, right? I just did the daily chart. Earnings. Oh, never mind. It's not Wells Fargo. Okay. But look at this. We're down $4 on Wells Fargo. Earnings didn't even happen yet. No, it did. It did? Yes. Okay. So this is an earnings report. Okay. So Wells Fargo's down about $4. Let's check those pre-market prices again. I feel like I maybe jumped in. Okay. So JPM down slightly, about 60 cents. Citigroup up about $1.30. Okay. So maybe mix there on the banks. I think BNY was another one. What's Bank of New York? Yep, this one, BK. This one's up about $1.80. All right, well, BK going up. Pre-market up a little bit higher. We'll take a look at everything. NDX, also broken wing butterfly, 21.5 right up here. This trade I collected about $2 credit. It was trading for like $1.10 yesterday, almost up 50%. And same type of thing. I think at least the move down yesterday helps. I'm probably not going to close out the position yet. I'd like to take this towards expiration because I'm not out, a full 30, 45 day to 60-day cycle. I'm only out about a couple weeks. So I'm hoping that's safe. Also, since we did have a pullback, it also makes it a little bit tougher. Unless the market's going to snap back in a big way, it makes it a little bit tougher to now go up about 3 to 4% to hit my broken wing butterfly. But also that's a trap position for me anyway. So if we do rally to 21.5, that 21.5 rally, we'd have to have a turnaround of around 6.6% in the next 2 weeks. Now, I know it's capable of that in the NASDAQ, but if it does come up to that level, that is ideally where I want price to be as far as me making the most money. But safety is I'm in the trade. I've already collected. I mean, I think I could probably protect about $2 of credit today if I wanted to, and I've been in the trade for 2 days. So not too bad, but I like the idea of having that bull trap if the market is struggling. Because now I went from like a 12 delta, 11 delta to now like 6 and 4 delta. So I think I posted this in Discord yesterday. The probability has jumped up in a big way. I'd have to go back a second here. Also, I want to take a look at that post from Charlie Bilello. That was pretty interesting. It felt like bizarro trading yesterday, but for me, I was really happy because it was a fresh high for all my accounts. which showed that I was pretty well positioned for a sell-off. I was, obviously things worked out nicely. It's like gold is up, silver's up. China's been up in a decent way the last week or so, and that's how I've been kind of diversifying. So anyway, I was looking for probabilities that I posted here. Maybe it was in the options chat for the broken wings. Yep, quick little 115. Yeah, it was yesterday, non-correlated. Yeah, well, that's what happens when I've got all these chats there it is. SPX and NDX broken wing butterfly trades just jumped from 88% probability to 92 to 96% with the slide. So it's making it harder for price to, I should say, less probable for price to come back and find my, strike levels. That'd be my sell strike in the broken wing butterfly. But the nice thing is if somehow it came back to inch its way up into that profit level, it would be into my hopefully bear trap, right? Which would well, I should say bull trap, because if the market was going to be here after sell off and it starts to gravitate back towards the highs again, I have my positions are, let's say this is what price is doing. Price is moving this way. Well, my position is still higher, and I also have my credit, I have my bear trap, and then I have my risk. So it's still risk defined. My SPX is over $1.50. It's $1.15, I think, for the credit, and then my NDX was $2. So if all goes well and price just stays where it is, I'll make $3.15 credit. Or if things go extremely well and we start to threaten the highs and move up and gravitate a little bit higher, then I have my traps up here that are offering about 10x profit. Rarely do I plan on those moves happening, but I put them at a 11 delta and a 12 delta, which those are the probabilities I'm working with. I did it so I could get enough credit that I'm happy with it. But that 10x trap would be pretty nice as we come into expiration in a couple weeks. So I kind of explained that more in the session yesterday with Nick and the team with A1 Trading. Broken wing butterfly is great when you can get a decent amount of credit for it. It's a nice little trade to kind of give yourself a bull and bear trap. I typically like to go out, a couple of weeks. If I want to do a typical cycle of 30 to 45 days, that's fine. We are looking at very low IV right now. Still, even after yesterday's sell-off, the VIX didn't really make a big jump. So let's talk about that for a moment. The VIX is still at 1255. So you'd think after a 1 and 2% sell-off, the VIX would rip. It's not really doing anything exciting, right? So still watching. If there's follow-through on the sell-off, then maybe the VIX gets a little bit more exciting. But it seemed pretty contained. And also the heat map yesterday, we go into... That's interesting. Let me just take a screenshot here. There. Okay, so CPI sell-off yesterday. This I thought was interesting. So the Mag 7 yesterday was down about 28% as a basket. Tesla taking the brunt of it, 8.4% on Tesla after being up 40+% the last like 10 or 11 trading days. Everything took a big haircut on the Mag 7, which I thought was extremely timely. I didn't take fudge. Well, let me see if I can get a screenshot from FinViz from yesterday. The heat map yesterday was pretty interesting. Let's go FinViz. Hopefully it's now grayed out. Yes, this is awesome. This is yesterday's heat map. Get out of here. I want to see the advanced decline line as well. So let me get back to this. There we go. All of your household names hit hard. Come on, man. Stop. Freaking ads. Gonna make me want to pay for FinViz. No thanks. All right, that's yesterday's heat map. I'm gonna note this. So we have that. Let's go up here and fill this in. Okay, so this was July 11, 24. Okay, so that's our Bizarro trade, which was everything that's been working, everything that's been carrying the market. Felt like yesterday it completely rotated elsewhere. This is why I wonder if we're going to get some follow through. Is this the ability for the small cap move, i.e., the Russell? Okay, I mean that's a big fat move. That's now up another $3. That's pretty exciting. Okay, so that's great. This just changed a lot from my 185 call to a 225. I'm curious what that's trading for. So that's something I'm going to look at here towards opening bell. If we open up higher again, this could be that pretty fantastic catch-up trade. I think I might take a couple of stabs at the Russell going into next week. If we break above this level and stay here, break and hold instead of come back and break and fill the gap. So I'm probably gonna have to take a trade that I'm willing to risk on it. But if this is an ascending wedge and we break above here, break, hold, we might have the very aggressive and quick catch-up trade simply because it's beat down, it's been underperforming, and it is 21% from this chop into these all-time highs. So the equal weighted S&P did okay yesterday compared to the S&P. The equal weighted NASDAQ hung in there. It was still down on the day, but not down nearly as much as the standard NDX and QQQ. Okay. All right. The yen has dropped another 100 pips in 17 minutes. All right. Let's take a look at currency strength. Oh, okay. All right. So starting around 9 o'clock, we have some more follow through on the yen, but it's snapped back a little bit. Okay. I mean, we're dealing with some pretty severe volatility. Man, be careful on those yen crosses. You're playing with liquidity and volume that you can't really control. I don't know, right? I mean, with that type of intervention, if that is forcing the mindset for institutional money to bail, to start deleveraging, volatility is going to be crazy. So just be careful. Trade it small if you're taking chances at it. It should be fairly technical, fairly liquid, but I'm telling you, we look at the charts here, look at the bigger time frames, and just keep the charts and analysis really clean. Okay. All right. Let's keep going here for the Pulver report watch list. So DXY. So the dollar's been selling off pretty steady here since the early part of July. I still wonder if we're going to hold these levels or break these levels. Do we break below 103.90? Is this the dollar weakness that's going to get priced in? If so, I mean, I hate the fact that we didn't get a top that I could call. If this was an equal high, or if this was an equal high, a lot easier to see the dollar get weak, right? But having this, kind of indecision, it's been up on the year. I thought it was a bit of a bear trap, and we moved up again. I'm like, okay, this dollar does want to, head back up to these highs again. No, it doesn't. So I'm not super convinced that the dollar is going to make a real clean move. We might come down and then bounce right back up. So if that's the case, the dollar remains very choppy and indecisive. But if we break below this 103.90 level, I hope it's not a fake out and the dollar possibly gets a little bit weaker. Now, that can also keep the stock market trending nicely to the upside. If the dollar gets weaker, we could still see risk appetite flowing into these asset markets and flow elsewhere. I mean, you've got your obviously dollar basket and Forex trading. You've got gold, you have silver. Maybe Bitcoin gets its crap together and stops sucking at that $60,000 mark or below it. But that's going to be dependent on what the dollar wants to do. So either the dollar is going to bounce off support or we're looking for a break. And like I said, I hate the fact we didn't get a good technical top to call here. But if we break below, we still have some opportunity for, let's say 104 down to 101. That's still 300 points. 300 points isn't nothing. So if we actually get a smooth basket move on the dollar, we could see 300 points a currency. So line up your, 7 currency pairs. Maybe the yen's a little bit more volatile. I mean, I think the basket could deliver, I don't know, a couple thousand pips. But it just hasn't been smooth sailing on the dollar because it's been pretty indecisive. But let's watch it. That's what I'm going to pay attention to. Oil. Oil is back up, which I'm bullish on oil. I'm bullish on crude oil futures. So the /CL, and I've got stop losses down here on 72.50. Looking good for some full profit, hopefully in the next couple of weeks. Gold at 24.02. So I showed down in the day with the market watch, but it's a tiny little candle compared to yesterday's bullishness. So I am really happy that I removed all of my caps on gold. So I'm long gold futures. I'm long GLD. I bought the shares of GLD at 212, and they were covered. I lowered it by, I want to say, $1 and change. But I got it out of the way because yesterday's move would have possibly made that call a little bit less profitable. I think I took about 50 to 55% of the profit, maybe more, but I got out of the way. I just didn't want to be bearish on gold. So I'm happy that way. It's running uncovered right now. My futures trade is down here towards like 22.90. Let's see, GC should be futures. Yep. So gold futures here. I have a stop loss around 2,300. That's my line in the sand. There's my 2280 and 2275. This is out to the end of August. So even if we stay sideways here, I'm looking to make sure that gold hopefully will stay above this support zone if it's going to range, or do we actually go higher? You know, do we come out of summer with the dollar trend? If we come out of summer with the dollar trend, I think we resume the trend in gold. Things get really interesting with the dollar trend, right? You start seeing Forex trends. You start seeing that translate into their inverse or positive negative correlations. I mean, gold could be a poked all-time highs. Silver, same thing. There's silver futures. So a little bit more red on the day, but still, silver's been performing pretty well from this turn at 28.59 on silver futures, or XAG. I guess I'd tick it over here. XAG. Around $30.71. So nice little break. Hopefully this is a break, pause, and then more upside. And I remain long silver and gold. Okay, Carlos is asking, am I bearish on the NASDAQ? Not necessarily. I think that yesterday was a bit of a shock to the system. I'm not really anything on the NASDAQ outside of a broken wing butterfly. I'm just picking and choosing my battles on the indexes, but it's income generation on SPX and NDX. What I am looking to get long on would be the Russell, the IWM. Ways to trade that, pretty simple. So we're about 3 minutes away from opening bell. Let me get logged in here to my platform. And I'm going to see what everything looks like for opening bell. And I want to look at just a simple trade going into next week on the Russell. I'm not going to pull the trigger on it today, but I'm just going to talk about how I'm going to craft that trade and construct the trade. Okay, so the nice thing is on the Russell, my 185 by 225 is looking much better. I was break even on this yesterday, and I still have lots of time. This is going out to January of 2025. So if the Russell does make a move, I mean, 225 is my call away price, and I realize that this might get to 225 quickly. This might make a ridiculous run towards 230. I also wonder if there is symmetry at play here. Which does happen, and this is what I'd be measuring. So if we had a low to high right here, okay, and then we get a follow-through move with this ascending wedge, if we're breaking these highs, let me drag this up here. Come on. There we go. Go to a symmetry move. I would be looking to the Russell to rip up here towards 231. Now, do we have, is that wave 3? Is this like a 1, 2, 3, and we're kind of blowing through these tops right now? Is this a part of a wave 3 that gets us to symmetry at 230? Do we have then a pause and then one more push to the upside, and then the Russell claims all-time highs? It would be great. Why? Because it shows measured upside potential. We're clearly getting a strong surge, and this is what we expected to see. If we're going to see a small cap move, it's going to be fast. So I mean, I like bullish on the Russell. Way to trade that would be prices at 213. We come into trading next week. Let's say price is around 213, and we'll just call it 213. I'll probably go down to like a 208, and I'll buy a call at 208, and then I will sell a call around 218. So I'll give myself about $10 of upside. If I wanted to be slightly more bullish, then I would try to stay out of the way and give myself $12, $15 of upside. Or I can just go out for 45 days and be long and sell against it and just do a debit spread. But I do like just a single direction on this one. I think it's important today. One thing I will say going into next week's trading, it is important today that the Russell maintains this green look. Okay. If it is right here at these same highs and resistance levels, and somehow today is a red day on the Russell, I'm not convinced this thing is going higher yet. Right. So I think a little bit more confirmation is needed. If we hang out here at 212, 213, Okay, fine. 214, 215. We're starting to get some higher highs and get a potential breakout. Okay, one other thing I could look at here would be just let me check some simple technicals. Get rid of that. Good there. Okay, so I'll move this back around. All right. So Carlos, to answer your question, not necessarily bearish. I want to see if there's some follow through today. This is really what I'm going to be watching the closest right here, kind of intraday levels. So, right now we're opening at 557, which was higher than where we closed yesterday. Pre-market, the data is in from PPI, which I didn't take a look at yet. So let's see that. And then let's watch the yen, because right now it looks like real time. Yen has given and has taken in the last 10 minutes of talking here. So lots of chop right out of the gates during the Asia session last night, kind of pre-Asia session. And then today with, the New York session and more volume, more liquidity for that US and London overlap. Kind of messy. So just be careful. Give me a little nuts out there in the old Japanese yen. All right, let's get logged in here. Very possible for sure. These lovely pairs, dollar yen bottom 140 pips for now. Yeah, we'll take a look at those yen crosses. PPI data for today, so came in hotter than expected. Got it. So the revision was PPI came in higher than expected, and this is producer price index, right? This is the change in the price of finished goods and services sold by producers, food and energy excluded. So what's this? It means that things are getting more expensive. PPI trending lower per yesterday. We're seeing this trending higher. So does this mean that they're going to pass on, their cost to consumers? Absolutely. Is this a 1 month print? Core is excluding food and energy. We know food and energy is always getting more expensive, or it's always very sticky, right? And for the last 4 years, we've come down and we've normalized. Still, it's a little wild crazy. And then your PPI is changing the price of finished goods and services sold by producers. Okay, so leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed, right? So this is probably not a good thing, right? What the market excited about? CPI down, small caps are rallying. We're going to get a rate cut in September. Says otherwise. This would say that, look, if cost consumers, that's going to be price inflation all over again for this reading. But it's 1 month. Does 1 month make a trend? Not really. Not really. Okay, so that's the news for today, though. Japanese yen, wild and crazy. Let's get into the charts here and chat about it. This is what I wanted to mention. So I want to go IWM. We're in the signs of a potential bull run. Step aside Looney, yeah. All right, so IWM on the weekly charts. A couple of things. I'll look at the daily and the weekly. So right now on the weekly, I'm looking for a couple. And again, there's going to be some here. So volume-wise, starting to see a little bit of green, which is fine. I would like to see a green histogram pop up on the MACD to show that we're getting a crossover. If we get a green histogram and a crossover in the MACD for those moving averages, then yes, we're looking for some follow through. We are not quite overbought, so even getting to these levels here, the weekly time frame is not overbought. Let's take a look at the daily. So the daily, big volume on the daily candle. This one has started to cross over, getting some green on histogram, and we're sitting here with our first measured move of overbought. Now, why is that important? Because look what happens here. We see a measured move of overbought, and then we get up into an overbought until we see divergence. And what does that do to the market? Well, if we go up, that was the big rally trend time Q4 of last year. Okay, so this is why I think price is going to be so important. As long as we stay green, MACD histogram is up, we're getting a crossover. There's some follow through above that zero. And this first reading of overbought, I think we could also get into a trend until we see divergence. And maybe that trend is 3240 zone where we start to see some topping. So this is probably one of my favorite indexes to be watching right now because I think there's good upside potential that's easy to see and measure. Sometimes I'm cutting out. Give me a quick AV check, everybody. I might have too many browsers open, so if that's the case, close a couple things down. Also, I mean, I'm running dynamic trends. I'm running, so I get it. Let me get rid of this and keep things a little bit simpler. All right. So I get it if computer's a little sometimes okay. All right. Well, and hopefully this next week I'll have a friggin' supercomputer show up at my place and I can be back on my workstation. So I've been working on a laptop and a monitor, which has been fine. It's actually quite comfortable, just chilling on the couch and having Benji hanging out. Audio choppy. All right. Let me just close a couple more browsers. It's probably freaking Chrome. And if nothing, I mean, I can close a couple things down. All right. Are we stable? A little broken in and out. All right. Just let me know if we're a little bit more stable. I'm just closing down some browsers, trying to bring down that bandwidth. And if it's choppy over the sound of snoring, that's not me. That's Benji, who's 2 feet away from me. All right. We'll just keep going. We'll power through it. You know, session will be posted and recorded. So let's just keep going. All righty. Acceptable chop, says Donna. Okay. Well, I'll accept that too. Hopefully the chop is in my voice and not my trading. All right. So we are here on the, let me get rid of this. All right. So I do like the indicators. I'll be taking an easy peek at that. Here's intraday on the SPY. Let me see if this is lighting up at all for real time. Let's go. So right now, open net is 335, and I mean, there's no standout gamma level this morning. 266 on the downside to 554, and 299 to the upside to 560. We're trading right in between. Now it is opening bell, so I do want to check one thing. If I center the price directionally today, let me center it around. Let me go here. SPX. So if I send it around 56, that's going to be right on the potential. I mean, so the SPX real time is looking for maybe a 55.75. Let me center this around like 55.8. I mean, it's not a big gamma level, but that's the only thing that I'm noticing right now is standing out in the. So I'm going to center this around 55.90. Okay, 55.90, and see if I can grab something out of the SPX. Okay, so for the 12th, 55.90, I'm going to see on the probably a 14 delta. So there. From 90 to the 50, I'm going to go down to a 13 delta on the put side, and then spread this, and then spread this. All right, so I'm looking at about 285 credit. Man, what is up with this freaking Google Chrome freaking memory leak garbage? It's so annoying. Like, I mean, I get it. I need a stronger computer, but come on, man. I have like 2 browsers open right now. So 0 DT strangle. Yesterday I did take a loss. I collected 295, ended up closing it for a 340 to 350 loss. So that was 711, and then today 712, centering around 55.90, which means I will be centering at 56.25 by 55.65. Okay, and that is showing around 280 of credit. So 280 credit going after a 15% take profit. That should only be about 35 to 40 cents. So 42 cents would be the net position. That would take me down to like 238 debit. All right, so I'll track that for the day. Okay, let's make sure we're good. And sometimes restream is a little rough as well. It's like I'm streaming this on 5 platforms plus a VPS plus all my applications. So again, hopefully it's a little bit better. I also have just one trading chart up versus multiple. And like I said, hopefully next week I got a big fat, solid, like 2 terabyte solid state hard drive, tons of RAM, and this never happens ever again. Ever again. I'm wondering if I could do an upgrade to my laptop as well with some more RAM, because I barely use this laptop. All right. Side note, do I have any traders out there that are watching live or you catch this recording? I'm going to be in Chicago this weekend. If I have any traders that are around the Chicago area, I'm going to a conference at Park West. It's going to be a tasty conference. I will see Tom Sosnoff and the team Saturday morning for a few hours, and then I'm going to hang out with my family for the remainder of the day. So if anybody's in town, anybody's in Chicago area, if you feel like coming downtown, I'd be happy to say hello and hang out for a little bit. If not, I'll be back on Monday. But let's get to my workspace here. Let's go back to my clean living charts. And let's talk currencies. Let's talk a little bit of everything. If you got some charts or requests, let me know. So Russell is continuing on from yesterday, which is good. A bit more. So I'm certainly happy to see that. Measure move up towards this 230 zone. Right in there. Not too bad. 230 and change. We are sitting here kind of Qs are up slightly. SPY's up slightly. Dow's up slightly. Russell is ripping. Dollar index, if we break 103.90, oil is up. Gold is steady. Silver's down 2.5% today, but not really doing any major damage other than maybe that break and pullback. Bitcoin, even with the anti-dollar move, Bitcoin hasn't budged. We're still below 60K. I said the last couple of weeks that Bitcoin now, with that bit of a bear trap move, I'm hoping we stabilize around that 56, 57 handle. We break back above $60,000, looking better on Bitcoin. Ethereum seems to be hanging in those lows a little bit better. Copper, maybe a good looking trade on copper. I'm going to see how far out and away I can get, but I might look at a trade. If copper is low to high, high or low, if we're going to see this as a crown pattern and this is a another run back up on copper, then I could probably get out of the way with some trades here. So I might look at a copper futures trade for the next maybe 60 to 90 days and see if I can get some decent credit out of that. The Nikkei is down. Ooh, that's a big sell-off in the old Nikkei. So we stretch up about 42,000 up to 42,450, dumping about two and change. Probably another reason the Japanese yen is on its toes today. The DAX is up a little bit. FTSE as well. That's Hen saying that's China. Ooh, what's up, China? There we go. FXI up as well. Thank you, thank you, thank you. K-Web, some large cap tech perhaps. Yes. Come on, man. This is looking good. Baba. Freaking go. Let's go. Baidu. I did not cover Baidu yesterday in my personal account. I still did some work on this. I rolled out some 110s to 130 on Baidu, so I'm giving myself plenty of upside here. I did it for a credit. The cost base is down to about $95. I lowered it personally on my end. Did I put a cost? Did I? I did. Yeah, so my break even on Baidu is 88.59. I'm covered out to the end of this month. 7/26 expiration, the 110 call. So I'm giving myself a little bit more upside. If I get it called away at 88.59, that's over $21 per share, which I'm certainly happy to flip considering I was owning this thing at the hundreds and I've lowered the cost basis down to 88.50 already. So not bad, but I'm also in a way not necessarily saying I want to get out of the stock because I like this move towards 150 or 155. A nice pattern here. And the nice thing is, let's say if we take out this high, I'm still looking for a pattern to trade, right? So, I mean, even though I might have a little bit of a repair in this low, there's still, potentially $50 to $60 of upside that may even be bigger than that. I mean, we're just off the double bottom lows here. So if this is a symmetry move, maybe we get a little bit higher towards 160, 170. So, to this area, taking profit, trapping, protecting, getting out of the trade there. I mean, there's $50 of upside. Anytime I own a share and I've got, $5 of upside, $10 of upside, I'm pretty happy with that, let alone $40, $50, $60 of upside. I'm thrilled with that. Okay. All right. Then we got our mags, which are down. Let's see if there's recovery here. Apple is off of yesterday's low. It's up a little bit. Amazon at 195, big sell off yesterday in Amazon. I'm happy that I have this collared and covered. Google 185 down from yesterday. Meta down and gapped lower. Ouch. It's good for my bear call spreads. Netflix down a decent amount. I'm way out of the way here with like $400 bull put spreads. Nvidia stop being a turd. August 2nd, I've got an expiration here. I've got the 126 to 146, 126 to 106 freaking move. So I was looking for, I need a $12 move in Nvidia. So hopefully I get it. I'm just right back where I started. So this is unfortunate. We came up to like 136. I had a break even trade there. We sold off yesterday. I think I've got enough time. If we're going to have an ugly remainder to July, Nvidia drops, everything is fine. I'd like this to get back. I mean, this would be to, 110 would be a $15 move. That would give me probably $15, $16 of credit on my position. That's enough to take some profit. Hopefully we don't stay sideways. So either, figure out how to get this thing back to 140 or dump this thing down to 115 or lower. 110 would be nice. 100 would be even better. What else? Tesla 242, up a little bit from yesterday, but man, what a crazy run this has been. 188 all the way up to 270. Whew. Just straight gangbusters. 43% up in the last 2 weeks of trading in Tesla. Probably volatile, but look at the structure. Okay. I think this structure is meaningful. To me, this is either a pullback and a chance to buy and stay with this trend. So this is going to be a key level for today into next week. As long as these bulls can maintain, I'd say above 220. If Tesla gets back below 220, we're pulling back a little bit deeper, and this might be Ugliesville. But if we can have a little bit of a pullback and the market's like, okay, we're good here and stabilizing, Tesla may continue its run. So I'm long on Tesla with a couple of different trades. I've got some put ratio spreads, some long positions and bias on the credit spreads. All my long calls have already taken profit. I was long here at the 110, 105 long calls. I'm taking profits on those. Now I'm just looking for time to work in my favor. All righty, let's get to some currencies. Let's go to the yen pairs really quickly. See some follow through from yesterday's giant ridiculous move. We're getting a little bit more red on the Aussie yen, but not following through, right? So we've already had some volatility on the day. That is as high as 107.80 and as low as 106.80. So we've got about 100 pips of volatility on the Aussie yen with no clear direction. Like I said, yesterday might have been exciting and traders getting all ready for this big sell-off. I don't see it yet. We've got to see some follow through if we want to be, looking for yen strength. Otherwise, this is a, sell-off intervention, buy the dip, and the darn thing goes all the way back up. And remember, the last time we intervention, we had 1, 2, 3 candles, created a big, postured move. But I'm telling you, if we have here indecision and then maybe one more day, that day would be we either have to see follow through there or this is the bottom. This thing rips right back up. So just don't be overly biased on the yen crosses as of yet. I don't see good clean confirmation, but I'm watching. Okay, CAD yen, a little bit of follow through, but same type of thing. You connect those recent lows. Are we following through? Not yet, right? Have we broken, the trend line? No. Have we broken recent lows? No. That would be my trend if we're going to see some CAD yen going down. I want to see it break a trend line, give us some bear flags, and unravel. We're still a long ways away from that. Okay. Swiss yen was one of the better looking setups for a sell stop. Even that trade was a little lackluster, right? If you put in a sell stop, you had, one day of follow through yesterday. I'm still not super convinced. However, I do like this one a little bit more. As far as technicals go, I do like this one for a potential bear flag. Okay. And there's a lot of space if we get to this outer trend line. You know, we can come back to the previous intervention level, that's target 1. We come back to the outer trend line, that's target 2. We make a bigger pattern where this sets up a head and shoulders. Now we're talking a target 3. Are we following me there? So this is the low, and this is some big, you know, head and shoulders pattern that emerges. I mean, sure, we can trade this area and we can trade this area, right? We can measure those moves, but we need some more follow through. Euro yen, same thing. We're not breaking the trend line yet. There's a lot of potential on this one as well. If we clear this intervention high, I'd still want to see where this thing goes. If we unravel, you know, previous highs, previous lows, you wonder what this kind of deleveraging looks like on the yen crosses if eventually we get it. Pound yen, probably one of the more volatile currency pairs yesterday. Now it's green. Okay, right at the trend line. All this did was came down to the trend line, stalled right there. So we're not quite getting the follow through I think everybody is hoping. New Zealand yen's okay, but the Kiwi is a little bit softer this week. Again, a lot of price action that I don't really like the reading on the New Zealand yen. I think this is a tough one technically to read. If there is an opportunity for a bear flag, then you're looking for that trade, but I would keep that stop loss pretty darn tight or just not trade it. I think there's cleaner setups on yen crosses elsewhere. And then dollar yen, same thing. Indecision on today. Is this the open space? Well, we're below the intervention level. If this is open space, there's room to gravitate back towards previous highs and find the trend line. It's not there yet. Not there yet. I can't emphasize that enough. Don't force these stupid trades. You know, the daily's rolled over, but the weekly's still up. A lot of our daily alignments are still bullish. A lot of our 4-hour, 8-hour alignments are still bullish, right? So be careful. All right. Yen cross is there. Any other currencies? Any other stocks? Anything else you'd like to take a look at today? 5602 on the SPX. Take a look at the SPYs. Anything lighten up to the upside with my gamma squeeze levels. I just the current nets are just not big enough for me to take a trade, but 560 looks like that's our largest magnet right now. So right in this, you know, 560 area right there. So we could gravitate to 560. Do we come back and stall right around the same level where we open, we close, or we just have a, you know, kind of an anti-directional day? Is this a fade the rally type move? I mean, if the market does this and comes back in a big way, then yesterday was just the opportunity to buy the friggin' dip, you know. But if we come, let's say, you know, current levels, or we get to this 560 level and sell off and finish right where we close, then there's pressure of closing at the lows for the week, right? We drifted higher, had the sell off yesterday. If we close back around those levels for the lows of the week, then next week's going to be really interesting. Follow through or buy the dip. Okay. So that's my takeaway from just watching price action today. All right. I'm going to jump onto the A1 trading here in a few minutes. I got an email from Chandler. I think I'm jumping in around 10 o'clock. So if you want to jump in with me for another session, another go around, come on in. I'll just post it again for my channel at youtube.com/Chris Pulver. Or if you're following the A1 trading team out there, I can go to the YouTube channel as well. That's either Trader Nick or at A1 Trading. Okay. So thanks for being with me today on the Pulver Report. Happy Friday. Come back and join me in a 5-minute break. We'll be back at 10 o'clock. And I'll tag team some new stuff, take some requests, probably talk gold, silver, dollar. We'll recap a little bit of the Pulver Report stuff. If anybody's in Chicago, I'll be there Saturday around the Park West area downtown. Give me a message, hit me up on Discord, and you know, we can find a way to meet up and grab some coffee or something. So, all right, thanks. I'll see you in a few minutes on the another stream for the Pulver Report. All right, bye.